All right, good morning, GM, everybody. Welcome to today's edition of the Premarket Prep session. I forgot I don't wear my glasses. This is our daily session where we go over all the news, notes, analysis, data, information, exposition necessary to make sure that you're on the winning end of the consistent. Get the results we want to get. We got to put in the time, we got to put in the reps, we got to put in the effort. And that's what this pre-market prep session is. Before you go into battle, you got to debrief, you got to, mount up, you got to armor up, all that great stuff. And that's exactly what happens during this session. So it's Friday, right? We're getting ready to head into the weekend, but we also still want to be vigilant as to any opportunities that might be here available for us. As always, throw a 1 in the chat signifying your intention to get 1% better by the end of this session. That's all we're trying to do. And if we can continue, to do that, then we can continue to make exponential leaps forward. Let me see here. Am I the only person nowadays that feels like someone's always trying to scam me? You go through your email and they're like, we received your request for a single-use code. Where was I? When did I request a single-use code? Like, that just makes me feel like there's somebody that is trying to access my account somewhere. Like, I feel like scammers just work double time nowadays, y'all. It's crazy. They're just on it. I feel like I have to watch myself all the time. You guys remember the Zoom minutes? I woke up one morning, somebody bought like $600 worth of Zoom minutes on my Zoom account, phone minutes. And I was like, what? I told Zoom, I was like, don't you ever let another, payment like this go through. I was like, I have a phone. I do not need to make phone calls off of Zoom. But I feel like part of life now is literally just fighting off scammers. And it's only going to get crazier, as AI continues, to move forward. It is just, it's a trip. I even have people that call my phone trying to get to my grandma, and it's straight scams. And they're like, we're looking for Carnell Holland. And they're like, action must be taken immediately, like, or legal recourse is imminent. And I'm just like, this is ridiculous. Like, I feel like they have especially a list of everybody over 70, and they just hit them hard. And whenever they do call and I pick up and they're looking for her, like, I just mess with them. I'm like, yeah, for sure. This is her. And you could hear it because they think she's gonna be an old lady. And then I get on the phone and they're like, I'm like, yeah, scam me. Yeah, let's see how that works out for you. But anyways, right, we started this morning off with the war versus the scammers. Let's get into our top news. So, time to tweak. It's already been a big week for the world's biggest central banks, but the Bank of Japan had to get in on the action after a further round of rate hikes in the US and Europe. The BOJ has remained an outlier on the world stage in the face of historic inflation, maintaining an easy monetary policy stance with its so-called yield curve control. In fact, it's the only prominent central bank to still keep rates in negative territory, but signs of creeping price pressures, impacts on its balance sheet, and side effects of prolonged easing, like the weakening of the yen, mean the institution cannot continue down this path indefinitely. So, path toward normalization, the BOJ already widened its bands last December, allowing Japan's 10-year bond yield to rise around 0.5%. Or double the previous upper limit. Building on the steps, the central bank today kept the target for the 10-year JGB yields at around 0%, but said its 0.5% ceiling on yield movements was now a reference and not a rigid limit. It will also offer to purchase Japanese government bonds in fixed rate operations, effectively setting a new hard cap for the 10-year yield at 1%. Quote, yield curve control is a dangerous policy that needs to be retired as soon as possible, said Kit Jux, chief FX strategist at Societe Generale. Quote, by anchoring JGB yields at a time when other major central banks have been raising rates, it's been a major factor in the yen reaching its lowest level in real terms since the 1970s. The BOJ wants to very carefully dismantle YCC, which is yield curve control, and the yen will rally as slowly as they do so. For the moment, that means there's little upside to USD and JPY, but the fall from here is also likely to be very slow until the global trend in bond yields turns decisively lower. So, market movement, the timing of the tweak makes sense as things stabilize following the regional banking crisis in the US, while the end of an aggressive hiking cycle can also be seen on the horizon. Markets still had a hard time deciding on direction overnight, with the Nikkei 225 index slumping to a session low of as much as 2.6% before finishing the day down 0.5%. The yen was also volatile on the news, fluctuating between 138.6 and 140.4 against the dollar. Now, while the benchmark 10-year JGB bond jumped to 0.575%, the highest level since 2014, before easing back. So, just some kind of foreign exchange information here. We cover a lot of different things, in these sessions, some directly market related, some, bonds related, some Forex related. This is kind of more Forex related. The Forex market is the largest market. I don't trade Forex, but plenty of people do. And, you can trade the non-scammy kind also. There's like the pyramid scheme type ones where you have to like give your money to somebody and they trade it for you. I don't believe in all that. And it gives all of trading a bad name. A lot of people get burned by it, but it is legitimately the largest like market in the world to trade. So this is more relating to the Forex market. I don't know how the Bank of Japan just sits there and like doesn't raise interest rates with inflation being so high, but everybody's got their own strategy. Everybody's got their own numbers to support what the heck they're trying to do. So, I'm not going to hate on it. It is what it is. If what they do works for them, then by all means continue it. In terms of economic news, doing just fine. The U.S. economy is showing further resilience as GDP grew at a 2.4% annualized rate in Q2, almost a full percentage point stronger than the 1.5% expected, which makes it even wilder that we sold off with the ferocity that we did yesterday. I mean, to get GDP numbers literally double what was expected and for the market to sell off, I feel like that it just hammers home how even wilder movement that we got this week. Like, you think, oh, GDP like being that strong, like, oh wow, this is amazing. No recession, like doubling our output, like the nation's output, and everybody's just like, nah, we do not care. All the institutional money is like, nope, could care less. Drop it, right? Tank it. So the growth was driven by robust consumer and business spending, while durable goods orders separately showed the fourth straight month of growth. A soft landing may be turning into the base case for strategists, but for those looking to hedge stock longs, B of A explains why it's never been cheaper to buy protection. Meanwhile, B of A's quant team detailed how every one of its stock screens has performed so far in 2023. See the list, blah, 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 right? They want to go and have you check out their B of A's list of strategies. So yeah, GDP numbers, we went over that yesterday, right? It's just crazy that they expected it to contract, and it not only did not contract, but doubled. That's probably the biggest difference in GDP results we've gotten in the past 3 to 5 years. Like, I don't think we've seen anything near that. Usually it'll vary by like 0.1%, but a full percent to the positive side was definitely a big surprise there. And it's pretty much kind of putting a nail in the coffin for any type of, net. Guys, always, and he's just flying around taunting me. One day, I'm going to devote all of my trading profits to just developing the ultimate weapon to just decimate the gnat population, because they are now my mortal enemy. Like, I can't deal with it anymore. As soon as I'm buying more of the light traps, and I'm just going to work in the darkness other than my stream light right here, and I'm just going to have all of them get stuck to the traps. Like, I've been making my own traps. Like, this is all out war, right? This is escalated to the highest point, and I'm going to take it even higher because I cannot stand. I don't even know where they come from, but I'm going to get them. I'm going to catch them all. I'm going to slap them out of the air. In terms of financials, more capital, U.S. regulators have jointly proposed to increase capital requirements for banks with more than $100 billion of assets in the so-called Basel III endgame. The changes will likely result in a 16% increase in common equity Tier 1 capital requirements for the affected companies, with the increase principally affecting the largest and most complex banks. Global, systematically important institutions, including Bank of America and JP Morgan, would still be subject to the strictest standards, while the new proposal aims to strengthen regulation of large regional lenders such as KeyCorp, ticker KEY, Huntington Bankshares, ticker HBAN, and Regions Financial, ticker RF. So that's just pretty much, regulators trying to tighten the reins on banks. I mean, you don't want any more of these Silicon Valley Bank type issues arising, where, these banks just don't have the correct regulations necessary to keep them, I don't know, from literally just screwing everything up, right? You have to put reins on people, otherwise they're going to run wild and blow up financial systems, and we just can't have that anymore. So I think it's a smart move, right, and something that is just necessary. Isn't that, man? Something that's just necessary in order to continue to avoid, right, and take preemptive strikes against anything like these, what was it, First Republic Bank and all the different banks that collapsed, trying to make sure that they can't do that again. Now, IPO's cold reception, now I feel like it's just going to be in all my drinks. I've got my water over here, my fruit protein shake over here. Like, I feel like the Nets are just dive bombing in, turning into a hot tub. So while the IPO market has staged a comeback after a downturn that lasted more than a year, Surf Air Mobility's ticker SRFM week trading debut showed that investors are picky about the companies they are willing to back. After setting a reference price at $20, shares of Surf Air started trading yesterday at $5 before ending the session 37% lower at $3.15 per share. Investors were likely wary of buying into the first direct listing of 2023, as Surf Air previously flagged substantial doubt about its ability to continue as a going concern. While investing group leader Donovan Jones also cautioned against investing in the electric aviation and regional air traffic company. So, I mean, the IPO market, right, it kind of had a resurgence with Kava, but it's still not what it used to be. Like, IPO used to be the premier way to take your company public. Then it turned into the SPAC method for a while, where you just had a shell company that just had cash and they went and acquired a real company and then changed their ticker name. And now IPOs, like, it sort of made a comeback, but looks like that's kind of falling on muted ears at this point, with Surf Air Mobility just not having the same traction as Kava. I doubt as many people freaking even know what Surf Air Mobility is. So also, it started trading on possibly the worst day ever. Like, it was one of the worst selling days we've had in a while, and that's when they decide to IPO. So, not a fun day to IPO either, to their credit. In terms of today's markets, we're looking mostly green, mixed bag, I guess I'd say. In Asia, Japan down 0.5%, Hong Kong up 1.3%, China up 1.8%, India down 0.2%. In Europe, the FTSE in London up 0.1%, Paris down 0.2%, Frankfurt down 0.1%, the Dow up 0.2%, S&P up 0.4%, NASDAQ up 0.8%, crude down 0.4%, gold up 2.3%, Bitcoin down 0.9% to roughly $29,212. Today's economic calendar, personal income and outlays. Weren't we supposed to have PCE data as well? Pretty sure we were supposed to get PCE inflation data. Let's see. Let's check that out and see if our boy Walter is back on top of it here. Oh, yesterday I know that Roku reported earnings as well. Okay. Personal income. Okay, so June PCE core price index up 0.2% rate on month, 4.1% on the year. And then June PCE price index up 0.2% rate on month, of 3% on the year. So I don't know what the expectations were supposed to be in terms of like how the market is reacting. I'm pretty sure that data was dropped at 8:30, and it looks like we dropped a bit when it was debuted. Then we popped, then we dropped, and then we popped again. So we'll see what the ultimate movement ends up being, but we're not seeing any initial drop, like immediate drop from that. In terms of kind of what we're looking at here today, not surprisingly, we saw a bounce overnight because we fell down to that 451.40 area, which has been a strong support in the past. And before that, it was a strong resistance. So, taking calls overnight heading into today would have been a nice swing. I wasn't anxious to swing anything because of how these lotto calls on the bounce treated us last time. You guys remember that, right? Throw a 2 in the chat if you remember that. We grabbed lotto calls on the bounce literally at the lowest point the day previous. Then on Friday, we opened up. Those calls should have been over 100%, and they were up like 40%. So they just completely robbed us in that instance. And I was like, all right, man. So even looking at it yesterday, knowing that we could bounce, I was like, you know what? I'm not even fooling around with you again to to be disappointed. And who knows, maybe, they got the pricing back under control. But that was one of the times when I was like, okay, this is when, people were like, the market's rigged. That was one of the few times where I was like, okay, you know what, I agree with that, because they screwed us on these. And we earned it, right? We caught the falling knife, got our calls after a severe sell off. Like, give me my 100%, right? But yeah. So, anyways, we're getting a little relief bounce. We'll see if that bounce ends up holding. Of course, you want to go ahead and throw the fibs on and see, okay, is this all just part of an elaborate bear flag scheme? 100% can be, unless we get above, this 456 50 area. I am just, or what is it? Like kind of 456.50 area. Until we get above that on the hourly, we can just turn right back around in reverse. So that's what I'm looking at here as we go into things this morning is, this 456.50 area, because that's also the previous daily resistance, right? That's that previous daily resistance that we've been struggling with for 3 sessions. That's at 456.43. So having both of those in the same area, I think is very significant, very important, and I am excited to kind of see how things shake out. We're approaching that area at open, so we could go up, test this 456.45 area, right, 456.50 area, and if we top out there, right, a great spot to grab puts. So puts on watch here at open. Again, you could go 0 date. That's extremely high risk, the highest risk that you could get. You could also go Monday as a nice compromise, or you could go next Friday as well. But, the possibility for a double top on the daily remains. If we get over this 456 50 area, 456.43, if we get over that on the hourly, then maybe we've got the, ability to continue this bounce. But as of right now, it's looking like we pushed overnight. We could push a few cents higher into this resistance area, and then I'm very anxious to see how we perform there. But we might have some action immediately upon open in terms of moves to be made, which is always a fun day when you can just worry about getting into things at open and executing from there. But what else is happening? We've got our rapid fire bullet point rundown to close us out. Ford rallies after hiking guidance and setting lofty EV targets. Airline turbulence. Southwest cost outlook rattles traders. AB InBev, whose ticker is Bud, right? They made Budweiser. AB InBev fires U.S. corporate staff as Bud Light sales slump. Dang, Bud Light still hasn't gotten it back. And they've really been trying to compensate with the commercials they've been dropping. I saw a Bud Light commercial or a Bud commercial where they packed a stadium full of veterans, and those are all the veterans that they've supported with the sales of Bud Light, just trying to go hard to the other direction. For you guys that don't know, they had the campaign with a trans representative or a trans person advertising Bud Light. And Bud Light's core, you got to know your core base. They did not like that, right? Bud Light instead thought, hey, our core is going to be with us. Let's try and branch out to other people. And man, their base was not happy, and they've been struggling and trying to do something in order to get it back. And, veterans is a good way to do that. You pack a stadium with veterans, right? We're all red hot blooded Americans that support, the Army and all that good stuff. And people do not care. They had problems with them. So they're really trying everything they can. And this has gotten literally all the U.S. corporate staff fired. So that is crazy. McDonald's, ticker MCD, easily tops comparable sales estimates in all regions. I think we got some type of construction or something going on outside. They'll also launch new store format based on the Cos MC character. Then Intel revenue decline halts in key consumer AI segments. Enphase Energy, ticker ENPH, takes a tumble in weak sales guidance. Vail to sell 13% of base metals unit in 2 deals totaling $3.4 billion. And then Roku soars with Q2 revenue, losses beating expectations. Earnings watch, ExxonMobil, Chevron to report today. So we got some big energy tickers going to report today. But that'll wrap us up, put a bow on it for this week, the last week in July, guys. We're headed into August, the best month. Ooh, Beth just got a little lisp there. The best month of the year, my birthday month. So very excited for August. This heat has been tearing everybody up, so stay safe out there this weekend. It's been borderline 100 degrees here each and every day. Went for my run this morning and came back soaked. So just be safe out there, drink tons of water. Kill all the gnats that you can, and have a great weekend. Let's end this Friday strong. Have a good one, people.